Well, Attacq is betting on Mall of Africa. That's as the property group picked up the remaining 20% it did not own for over 1 billion rand. This now makes it the sole owner of the mall situated in Midrand. And joining me now as we discuss the merits of this move is company CEO Jackie van Niekerk. Of course, you do know that there are also quite a few terms and conditions that must be met before the actual finalization. But you are going for that 20% stake. I mean, you've had a controlling stake in a Mall of Africa and you've been managing the mall. Why acquire the rest of it now and not earlier?
Yeah, so I always said at results presentation, people would ask me exactly the same question, and I would say there's a right time and a right price,
Okay.
for the acquisition of Mall of Africa. And we quite recently disposed our MAS shares, our 6.5% of our stake in MAS. They were not paying any income or dividends out to us. So we had a non-income producing asset. So we sold it. So we were a bit more, we were heavy on cash. And for us buying Mall of Africa, we're the ultimate insider. We know, understand, manage the mall. And it was quite an easy acquisition as we are the driving force behind the growth of the mall with the development at Waterfall. We negotiated a price that was acceptable for us and then it concluded a transaction subject to further CPs that still need to be met.
Well, actually, quite interesting that you talk about being heavy on cash because of the sale of the MAS stake. And I mean, usually when companies do have this extra cash, they go for reducing their gearing. And I'm wondering what then the decision making was in terms of deciding where to put this money.
Yeah, so that's a very good question. Last year, we concluded the GPF transaction where they bought in 30% of AWIC, which substantially reduced our gearing to below 30, even below 25%. So, we fixed up our balance sheet. We've got a phenomenal partner in now with the GPF in AWIC, and they were part of the decision making of, acquiring a further 20% stake of the mall. So we felt our balance sheet is healthy enough. And then selling the stake of MAS, from an Attacq point of view, we had the cash, and for me, having just cash in the bank is great for us, reducing our gearing. We've done exceptionally well, and now it's what is the future and what future growth can we get out of investment? And again, Mall of Africa on our doorstep, we know and we understand it very well, and we feel particularly that there is some future growth that we can further unlock out of this asset.
All right, you talk about the right price. Is this the best price that you could have gotten it for?
In a transaction, you always get an unhappy, or both parties must be a little bit unhappy. Yes. I think it's a fair price that we paid for Mall of Africa. It's a super regional shopping center trading exceptionally well. And we've got a lot of respect for our peers and our joint partners that exited the mall, that played a vital role in the development of this particular mall. So we think it's a fair price from an Attacq point of view. Our Attacq shareholders should be comfortable with the price. We definitely are. We are quite proud of how we've achieved it, and we look to further outperform the price that we paid for it with increasing it with great income.
All right. Well, let's talk about the timelines in which you have to secure the key terms and conditions. What are the key due dates here, and are there any penalties if those aren't met?
Yeah, so we've got a 90-day window period that we need to conclude, which is the biggest component of concluding this transaction. Condition is the Competition Commission filing. We fill out 3 months for that. That is the most, I would say that's the critical path of approval. Other than that, it's here and there a small approval that is, not as critical and time consuming as the Competition Commission approval. We've got 3 months post that. The purchase price will escalate by 4.5%, and we hope to wrap it up in the next 90 days.
Jackie, of course, with the 100% ownership, is there maybe a shift in the cost base that you can expect? Does that change in any way?
Not particularly material costs that would shift. We will remain the management team on site will 100% remain as is. They a formidable team. They do an exceptional job at managing the mall. So not material. We won't see any cost saving, but there may be a bit more synergy between Mall of Africa and the rest of the city. Although once again, our current partners in the mall, was part of the bigger mall, city development at a stage. So we don't see big savings on cost, but maybe just more better collaboration.
Yeah, I mean, just to wrap up the conversation, you talk about the synergy between Mall of Africa and the rest of the city. Of course, Mall of Africa being the anchor. What do the expansion plans of Waterfall City currently look like?
Yeah, quite exciting. Again, ultimate insider. We drive the density of the city, and we know the more we develop, and having 1.5 million square meters of bulk left, we're not even halfway from a development point of view, which gives you the growth aspects of how Mall of Africa further still grow. Immediate growth aspects, we're looking at launching another, based on the success of the Ellipse residential development, we're looking at launching another residential scheme actually situated on top of the mall. So really looking at the work, live, play, lifestyle element. Particularly the trend of where is retail going. It's much more lifestyle focused than just, going to shop. And having this blank canvas and seeing how the market shifts gives us a fantastic opportunity to cater for the future needs of where retail is going, and also unlocking a world-class city and offering that to the people in Johannesburg.
All right. Well, thank you so much for your time and giving us insight on that, Jackie. Really appreciate it. That was Attacq CEO Jackie van Niekerk.